I am so glad you convinced me that the family car should be the Defender 110. It is so beautiful inside, it's so comfortable, and it just feels indestructible.
Yes, it really is. I've been waiting a long time for the new model to come out. The Defender 110, I'm telling you, it's my favorite car of all times. It's my third one. You know, I have stories of going off road. The guy managed the group. He was like, "What are you doing in this beautiful car?" I'm like, "I'm going off road." He's like, "Are you sure? Because you can use one of ours." And then they look like Mad Max cars. I'm like, "No, no, 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 we're going to do this." And he was shocked.
Wow. Well, it's great because the Defender has been reimagined for 21st century adventure, and its unparalleled off-road ability as well as its robust interior are invaluable whether you're headed towards uncharted territory or just a weekend of exploration. The Defender 110 tackles challenging surroundings with absolute confidence. The SUV conveys strength outside and in, featuring peerless technology like an intuitive driver display and an award-winning infotainment system. That's my favorite part, to keep you connected no matter where the journey takes you. Adventure is unique to everyone, and so is the Defender. Choose from the two-door Defender 90, the four-door Defender 110, or the larger Defender 130 with the ability to seat up to 8 passengers. You'll find uncompromising performance in all three. So pack up and go even further with the Defender 110. Learn more at LandRoverUSA.com/Defender.
These days, we're all investors, trying to be smart with our money despite our worst impulses. But at iShares, we believe that deep down inside of every investor is a better investor. One that's just waiting to be let out. Explore iShares ETFs and insights and let your best investor out. Visit iShares.com for more information.
This isn't your average business podcast, and he's not your average host. This is the James Altucher Show.
The student loan, it's still going through. Also, Nancy Pelosi is not Speaker of House anymore.
One of those things is true and one of those things is not true. So I think the courts are upset about the student loan forgiveness thing. I don't know what I honestly don't know what the story is, but I have read headlines that it's probably not going to happen.
That's
So just to mention, we were talking about the law of max screwing, which we just defined here. So there's Murphy's Law and now James Omid J's Law, which is that if you could ask the question, like, I hope I'm not paying for X, then the answer is always, yes, you are in some way, because you're always being screwed in the maximum possible way you could imagine. So if you have to ask the question, then yes, you are being screwed. And the reason this came up is Jay, you don't pay for electric vehicle charging in your building. And Omid asked, well, I hope I'm not paying for it. And the default answer is, yes, you're paying for it, even though we have no idea how you could possibly be paying for it. And then Jay, you brought up a real example. Oh, yeah. Omid asked you if you are getting the subsidy on your vehicle, and you said no, they ran out. And of course, because you're screwed somehow. You got max screwed.
people who buy a Tesla next year are going to get the rebate that you did not. Oh, yeah, that's max screwed right there.
Yeah. But by the way, they're going to be max screwed if they buy a Tesla next year because A, prices are going up because he had to use so much of Tesla money and resources to buy Twitter. And B, electricity prices are going to go up because all the gas in the U.S. was used up until the election, and gas prices are going to go up next year. So
There you go.
Everybody's getting screwed. But let's see if the law of max screwing applies to crypto. Omid Malekan, author of the only crypto book I have sitting on my bookshelf right now, Re-Architecting Trust, The Curse of History, and the Crypto Cure for Money, Markets, and Platforms by Omid Malekan. Omid, despite the title, I hope this book is selling really great.
I was wondering if you would bring up the title again, so thanks for the reminder.
People of the title, Re-Architecting
Yes.
Trust. I still think the Crypto Cure or the Curse of History and the Crypto Cure, that's an exciting kind of title. It's a curse and it's a cure.
Alliteration is my favorite literary technique, as anybody who reads the book will be able to tell. So,
Omid, thank you so much for coming on the show. We've had many conversations off the show, but you have so much knowledge to share. Formerly involved with Citigroup and all things crypto. now on your own doing all sorts of stuff. We've obviously, FTX was this huge scandal in the crypto space. People are saying it's the largest, corporate fraud in history, larger than Enron. I've actually already done a podcast on that. So we don't have to go over every detail of FTX. But are people going to lose faith in crypto with the fact that you can't trust where you put your money necessarily?
In the short term, some people are, but the most important thing to remember is that at the end of the day, a technology is either useful at solving problems or it's not. And what happens with various individuals or corporations who at some point are prominent in doing something with that technology, in the long run becomes irrelevant in the conversation. So, for example, you and I are old enough to remember that after the dot-com bust, there were some various busts and also frauds. WorldCom at the time, I think, was the biggest corporate scandal in U.S. history. But and there were probably skeptics back then who thought, this whole information revolution and the internet and e-commerce and the importance of telcos, that was all hype. The internet doesn't actually solve any real problems, blah, blah, blah. Now, when we look back, that all seems kind of funny. And in fact, most people probably don't even remember what happened with WorldCom. And in the aftermath of this FTX blow up, I touched up on some of my own history, including some of the stuff I talk about in the book. And it's interesting that there's almost a likelihood that anytime you have some kind of a transformative technology hit the scene, that there's a lot of chaos in the beginning, and also that there's some kind of a catastrophic scandal. So this was true in the early days of the oil industry. It was true in the early days of the railroad industry. I talked about the internet example. And ironically, even central banking itself, one of the anecdotes I discuss in the book is what happened in France hundreds of years ago. One of the first experiments with the current model of central banking, where the central bank just issues paper money. And it ended catastrophically in ways that ended up sowing the seeds to what would eventually become the French Revolution. But I'll bring all this up because at the end of the day, we have trains, we have oil, we have the internet, we have central banks, because what mattered in the long run wasn't whichever the early adopters were and whatever the scandal was. What mattered in the long run was, did that technology, be it physical or social, solve important problems? And I think the case for crypto doing that is as strong as ever.
And I'll get to what problems crypto solves in a second, but you're so right. And even more recent examples, and by recent, I mean in the past, let's say 50 years, you have the savings. Financial innovation is a tricky one because the problems it solves only appears after that initial mass speculation happens and that first fraud happens. So you have, for instance, junk bonds was an incredible financial innovation, where a young student of Wharton named Michael Malekan wrote a thesis that said basically bonds that were rated around C or B minus, which is considered junk. They were called junk bonds. They were considered so bad, actually repaid more often than people expected, that you could make a lot of money investing in junk bonds. But then there became a junk bond bubble created by then banker Michael Malekan that people took advantage of, and there was lots of fraud, and he ended up going to jail for a while. And then there was the savings and loan industry just a few years after that, where I don't even know all the details of that. But of course, you had the internet. You had Enron, which was trading in natural gas derivatives. You had Lehman Brothers, which was dealing in the highly unregulated space of derivatives on derivatives on derivatives in the housing industry. You had Bernie Madoff, of course. And now we have this FTX, which, by the way, it's not like this was a 150-year-old U.S. bank, highly regulated. This was something started 3 years ago by essentially a guy living in the Bahamas. It's completely unregulated. It's less regulated than the average hedge fund in the U.S. is. And something like this was bound to happen, although it's unfortunate that it did.
It's unfortunate that it did. And there are aspects of the FTX story that are still shocking, even to me. The
Like
biggest
what?
one being that one is that all these supposedly very sophisticated investors, including Sequoia and the Singaporean Sovereign Wealth Fund, invested vast sums of money into this company at very high valuations. And while they claim to have done significant due diligence, I can't see how that's possible. Even today, the person who's taken over now to lead the bankruptcy process, I forget his name, but he's done this for Enron.
When Enron went bankrupt and the fraud was revealed, he was the one to take over Enron and unwind it.
But then in the report, the initial report that he put out, he said that this was like the messiest company he's ever seen, far worse than Enron or anything like it. And I just, as someone who's worked with venture investors, I don't know how how a company could be this disorganized and messy, never mind fraudulent, which it turned out to be. But you would think all of these investors, particularly because this is a very lightly regulated company that was based in the Bahamas, it's a new company, it's run by a bunch of young people who are very inexperienced at running companies. You would think that their due diligence, if they actually did what they did, would have brought up a series of important red flags.
I wonder if early on those red flags existed. So, I mean, a lot of the problems stemmed in recent days from the fact that they had a $10 billion margin call and, Sam Bankman-Fried, SBF as he's called, he moved $10 billion worth of FTX client assets over to this hedge fund, which is totally, illegal. But that was only the most recent part. I don't know. Maybe there wasn't anything illegal, 3 years ago when he was getting investment or 2 years ago.
Well, some of these were earlier this year.
Mm.
So it was recent enough. And even what you alluded to, that for people like me, I never expected it to be this scale of a fraud. But
Yeah.
the fact that you have one of the biggest exchanges basically co-own one of the biggest hedge funds is completely unacceptable. And this is one of those things where the crypto industry would be served well to learn the lessons of history from traditional finance. And one of those lessons is that it's very important to have separation of responsibilities. So if you go into the Wall Street structure, you have exchanges, but then you also have custodians, and you have brokers, and you have clearing houses. And by design, there's a lot of separation between them, some of which was even tightened further after Madoff, because the idea is that they serve as sort of checks and balances on each other and that you eliminate potential conflicts of interest. And one of the interesting things with SBF and FTX that makes this story very Madoff-like, I think you've talked about this repeatedly on your podcast, that one of the reasons Madoff got to be so big was because his investors thought that he was doing something shady, but they didn't think he was running a Ponzi scheme. They thought he was front-running his market-making business.
Right. So they already were kind of winking at each other. Hey, this is probably illegal, but we're not involved, so we're going to make a lot of money from it. We're on the same side as Madoff. And I suspect Alameda, customers or investors or even FTX investors who were staking probably thought, yeah, he's probably doing something shady, but at least we're benefiting from it.
That's right. So I am guessing one of the reasons people were willing to look the other way of the shoddy stuff is they thought, oh yeah, well, he's got this hedge fund, and he's got this exchange, and they might be ripping off the exchange's clients, but that's just good for the exchange's business.
Yeah. And so that's probably why they invested. They probably did not think it could go under in any way. And this is the mistake people repeatedly make. Like even you were referring to the early experiments in the central bank with John Law and how he would print money. The people early on, or the people who were closest to him, probably figured, hey, this is a Ponzi scheme, but at least we're at the top.
Yeah, and one of the consequences of John Law's initial efforts was the Mississippi bubble, which was literally making everybody rich. So that is, I think, another takeaway from what happened here is that crypto has these severe boom bust cycles, and we're now coming off yet another bubble phase. And during that bubble phase, a lot of people sort of suspend skepticism and disbelief. And particularly from institutions, I'm fascinated by this idea that a lot of the capital in crypto is biased. by which I mean, here you have these massive institutions investing lots of money in a unregulated corporation that was founded 3 years ago because it does stuff with crypto, but they would never there own Bitcoin.
Yeah.
And I think that there are legitimate reasons for why a pension fund or a sovereign wealth fund might not own Bitcoin. The regulatory questions, the infrastructure in terms of things like custody might not be enough. But I've always thought it was funny. Like, I meet people, even over the summer, who would tell me, I want to invest in crypto startups. What should I invest in? And I would say, well, Bitcoin's at like 20,000. You should just, if you want exposure to the cryptocurrency industry, you can now get the blue chip crypto that's made it this far at less than 50% what it was a year ago. Why would you want to buy some startup that'll probably fail just to get tangential exposure to it? And I think that restriction that was self-imposed on pension funds and institutions led them to make some dumb and risky decisions, not just with FTX, but with some of the other crypto corporations that have blown up in the last 3-4 months, like Celsius.
Well, you make an interesting point. And by the way, now I'm going to mention your title, but in a positive way. Title of your book is Re-Architecting Trust. And that's really what's the difference between FTX and the crypto industry. So the whole idea of Bitcoin, as you explained to me on a different podcast, a month or so ago here, the whole idea of crypto is to be trustless, that there's no human you need to trust. It's an algorithm that everyone could see, basically. Like, notice there's been no fraud with any of the decentralized finance exchanges that are built on top of blockchain because it's all algorithmic. We could see every transaction, essentially. We know what's allowed and what's not because it's just right there written in the code. So certainly the largest DeFi exchanges, the main players have gone through the code and it's fine, or else these wouldn't be large exchanges now. And FTX was run by this kid who was making decisions. You couldn't trust him. It's the whole point of crypto is not to have to trust some kid to make valuable decisions on your money.
Indeed. And to me, one of the other takeaways from this latest period is that the technology worked surprisingly well, I would say, because it's been stress tested because of the severe volatility that we've had. We've also had, because of the fallout from what happened with FTX, various other kinds of exchanges and lenders have liquidity issues, potentially even insolvency issues. But the major blockchains, Bitcoin, Ethereum, et cetera, they worked fine. The decentralized finance applications that you were referring to, they worked fine. So hopefully this is going to be a wake-up call for everyone from individual users to even the big institutions that play in this world, that it's time to double down on the actual decentralized corners of the industry that are trustless and resilient and a lot less likely to turn out to be a massive fraud than FTX, which at the end of the day was just a corporation like any other.
You know what I love about fantasy sports is that even though I'm not going to be a great basketball player or a baseball player or a football player or whatever, I feel like I get to participate and make decisions and use my knowledge of these different leagues or these different sports to compete. So it's like I can pick my team or I can pick my favorite players and I could use my knowledge to make predictions and maybe even make money. So with the basketball season here, you can now pick combo projections across football and basketball from the Specials League on Prize Picks. This is a league created specifically for combo projections that include two or more players from different sports or leagues. Want to play alongside some of Prize Picks' favorite players like rapper Meek Mill and comedian Andrew Schultz, who's also been a guest on this podcast, and I've been a guest on his? You can now find community plays under the promos tab of the app to view entries for some of the biggest names in the Prize Picks community each week. Look, Prize Picks even offers a reboot policy so that your entries stay in play even if one of your players gets injured. For football and basketball games, if you have a player who exits the game in the first half and does not return in the second, that player is rebooted. Prize Picks is the only daily fantasy sports platform with an injury insurance policy. What? So I love playing it. I love anywhere where I can use analytical ability with my interests to demonstrate some skill and maybe make some money. And I like the game-like aspect. I do wish they had chess as a category on prizepicks.com, but I'll settle for what they've got. Maybe I should make my own fantasy chess league. But in any case, I love Prize Picks. Go to prizepicks.com/James. Use code James for a first deposit match up to $100. That's the easiest $100 you're ever going to make. So that's prizepicks.com/James and use code James. Daily fantasy sports made easy. The future of learning is definitely online. Like, it's such BS that you have to spend $200,000 or take $200,000 in loans and go to some fancy school when it's useless. It doesn't guarantee you a job. Most employers, including me, do not care about degrees or grades or anything like that. We want to care that you love what you're doing, that you know what you're doing, in some cases that you have experience or that you're willing to learn. But people in general love learning and are curious. Like, the key to success is curiosity. And I think masterclass.com is the perfect model for online learning. I'm really happy they're sponsoring this episode. If you're going to give a gift, give the gift of learning. Masterclass makes a meaningful gift this season for you and anyone on your list, because both of you can learn from the best to become your best, from leadership to effective communication to cooking. Let me tell you some of the classes I've taken. I've taken comedy from Steve Martin. I mean, can you believe I can take a class from Steve Martin on comedy, or Judd Apatow, my favorite comedy director? I could take an actual class from him on writing. Wolfgang Puck on cooking. Dan Brown on writing, or Judy Bloom, who's been on this podcast, on writing. By the way, Wolfgang Puck also has been on this podcast. It's such a pleasure. I try to take classes all the time from masterclass.com. And whether you're watching Masterclass on TV or listening in audio mode in the app or on their site, the quality speaks for itself. It's like these Masterclass instructors are your own personal mentors that are going to help you reach the next level. How much would it cost to take one-on-one classes on comedy from Steve Martin or on chess from Gary Kasparov? You just wouldn't be able to do it. But it would cost hundreds of thousands of dollars. With a Masterclass annual membership, it's $10 a month. Memberships start at $120 a year for unlimited access to one-on-one classes with all 180 plus Masterclass instructors. So it's not just $120 for one instructor. You get all 180 plus Masterclass instructors. Boost your confidence and find practical takeaways you can apply to your life and at work. And if you own a business or are a team leader, use Masterclass to empower and create future-ready employees and leaders. That's the real education in today's world. So this holiday season, you can give one annual membership and get one free at masterclass.com/JAS. JAS, of course, stands for the James Altucher Show. So right now you can get two memberships for the price of one at masterclass.com/JAS. Masterclass.com/JAS. Offer terms apply. Let's take Coinbase as a great example of a centralized exchange, not decentralized. I would say that's most likely, as trustworthy as any other brokerage firm in the US, because it's in the US, it's regulated, it's a public company, so it's heavily audited, probably more extensively audited than most because of the crypto aspect. Nobody's taking chances. And if you're a public company in the US and you're the CEO and the CFO, you could go to jail if you lie. Even a tiny lie on a financial statement, you're going to jail because of laws enacted after Enron and WorldCom. So I do think, exchanges like Coinbase, maybe CoinList, and a few others are safe because they're in the US, but this one was not. And I will add also, crypto is obviously a $1.5 trillion industry, maybe larger now, and FTX had 16 billion in assets. So it was a very small part of the industry, 1% of the industry. But, still it scares people. They don't know what to do. All the people who kept saying crypto is a fad, it's not going to exist, just like in the internet days. Now they're saying, I told you so. just like from 2000 to 2002, all those internet naysayers were saying, "I told you so," and then they shut up after that. But what happens next, and what would be a catalyst that would get, right now, Bitcoin and Ethereum been in a range, like Ethereum's been between 1,200 and 1,300, maybe Bitcoin's been between 15 and 18,000, since this FTX stuff. What happens next?
I think I'll set aside the macro considerations of what the Fed's going to do and all that, because
Yeah.
far be it from me to be able to predict that. But I think the next big thing is going to be utility and adoption of everything from Bitcoin to Ethereum to some of these DeFi protocols to even things like NFTs for applications that go beyond just the needs of crypto speculators.
Yeah.
Because one of the critiques against the industry is that it is very internal looking, that people come up with solutions just to make it easier for someone to trade cryptocurrencies, and new currencies are for projects that give you leverage on other currencies, which is true. I don't think that's a bad thing, because I think first you have to really build out the core infrastructure before you can start migrating other economic activities onto it. But the good news is, unlike, say, the last bear market 4 years ago, I think the infrastructure has come along significantly. I think there are a lot more smart, capable people in the industry now. I think we've done a better job of figuring out what works and what doesn't work. So what I'm excited to see now is things like stablecoins being adopted for payments that have nothing to do with people buying or selling Bitcoin, or NFTs being adopted for applications that go beyond people just speculating on a work of art.
Like what?
Could literally be anything. I think the last time we were on here, we talked about tickets.
Yeah.
Right? That's one example, but it could be an NFT is just a good way to assign property rights to any kind of intangible asset. So if you go down the list, and there's studies that show that increasingly the world's assets are intangible assets. So if we go back 100 years, most of the world's assets were real assets. So you're talking about things like real estate, gold, physical commodities, etc. But now, if you go and look at even a company like Disney, it has parks and physical assets, but I would imagine it's intangible assets, like the brands it has for things like Marvel, the movies that it has put out, the characters, etc., are many times more valuable than things like its parks. And this is true almost universally as the economy digitizes now, that the most valuable things, intellectual property, royalty rights, they're all intangible. And before crypto, you had to sort of surrender control to some kind of a centralized institution, but now you can turn all of those things into an NFT and put them on the blockchain.
Yeah, an NFT, or you can tokenize them. So, for instance, take the Marvel example. I could, if I'm Disney, I don't have to sell any shares or give up any equity or do some weird thing like spin the Avengers off into a company and IPO that. I could say, look, we're going to take 10% of the Avengers' future cash flows, whether it's movies, toys, comics, whatever, books. We're going to take 10% of the Avengers' future cash flows for the next 10 years, and we're going to turn them into 1 million tokens. And if you buy one token, you have 1/1,000,000th of 10% of all the cash flows from the Avengers for the next 10 years. And here's the thing. Here's what's beautiful about crypto. As you've mentioned before on this podcast, that's a smart contract. So you don't need a whole layer of lawyers and escrows and accountants to figure it all out. It just, everything goes into a black box on the blockchain and then gets distributed pro rata automatically by just the rules of crypto and how the smart contract is structured. And second, then this is even more a bigger thing in my eye, is there this concept of an internet of value. Like, once I have that token, and I've never been able to do this before, I could now sell that for another token. Like, let's say, Omid, you were tokenizing 10% of your house, and I could trade my token of Avengers for a token on Omid's house on a DeFi exchange 24 hours a day, 7 days a week. Suddenly, everything that's intangible can actually have a value and be traded for anything else that has value, which will lead to its own ups and downs, pros and cons, but it will make the world so much more, it'll make the economy so much bigger and so much more innovative. We've never even seen the likes of it.
Agreed. Because what we're doing now is we are first introducing far more trustworthy property rights to items that otherwise don't have any. That's the first step of tokenization. And then the second part of what you were alluding to is another blockchain concept, which is this idea of composability. That let's say Disney issues that token that you mentioned on a popular chain like Ethereum. Now that same asset could be used by other projects, other protocols, other innovators to one, come up with new solutions for them. So maybe somebody figures out that there is a way if you package the Disney token with some other tokens, you can give people unique experiences, or even like you could continue to sort of securitize or tokenize them further into things like derivatives. And two, the pace of innovation that you alluded to now goes parabolic because there are probably a lot of people out there today that have great ideas on what they could do with everything from some claim on Marvel movies, like what you alluded to is just a claim on cash flows. But it could also have other kinds of participation rights. Like maybe if you own those tokens, you get to be the first to get some physical merch or digital merch. Or maybe if you have enough of those tokens, you get to go and attend a screening party or something like that.
Right. And to your point is it doesn't have to be Marvel coming up with these other solutions. I could, like, let's say Marvel issues that. I can now make a line of Avengers merchandise or some other merchandise and say, hey, I will sell this merchandise only in exchange for Avengers tokens.
Yeah. So the sky's the limit. And actually, we don't even have to talk about hypothetical examples because Starbucks is coming up with new kinds of tokens and NFTs and rewards on a blockchain, on Polygon, which is a Ethereum compatible blockchain. And it's interesting, actually, one of the assignments I give to my students is to let's brainstorm what one can do with this. And one example that comes up is that there are millions of Starbucks customers all over the world, and now they're going to get some kind of a reward token or coupon or something in their wallet. This now happens on a public blockchain, which means that if you and I were to say we started a cookie company and we wanted to get the word out on our cookie company, one of the things we could do is we can go on Polygon and we could airdrop a token that represents a 50% off coupon to our cookies. And we airdrop them to the most avid Starbucks customers.
Can I ask you what you mean? Like, so if I have Starbucks tokens, for instance,
Yeah.
they can specifically advertise, hey, anybody with Starbucks tokens, we're going to give you for free these cookie tokens, which have an actual monetary value because they represent a discount, a 50% discount to the price of a cookie. So you can even figure out like if you're buying them cheap or expensive.
Yeah. And mind you, we can do all this without any involvement from Starbucks. But here, what we've done now is that this is a win-win-win idea because the Starbucks customers benefit because now they're getting discounts on cookies. You and I benefit because we get to tap into the network effects of people who like Starbucks coffee. And then Starbucks benefits because it can now say, hey, how great is it that if you're just by virtue of being my customer and getting my loyalty tokens, you're now getting all sorts of other perks. This, by the way, is something that companies do all the time, right? Co-branding, co-marketing, like if you fly this airline, you get a discount at this hotel is a simple example of it. However, traditionally, because of the inefficiency of the infrastructure, to build something like that probably takes several years of business development teams working together and having to figuring out what databases or systems to use to integrate these things so you can measure who has how many airline miles and who's staying at what hotel. Once you start moving these assets on chain, all it takes is a couple of lines of smart contract code. And then you can build on top of previous solutions very efficiently.
Oh my gosh, I love these clothes. Mizzen and Main. That's Mizzen and Main. It really is the most comfortable work clothes. Travel clothes. I had to travel this whole week. I'm traveling for a week and a half, and I just took Mizzen and Main clothes with me. Close out 2023 in style with comfortable, breathable, packable, and machine washable pieces from Mizzen and Main. As you wrap up your year-end goals, enjoy a Mizzen and Main dress shirt that you can wear confidently. I like that they've very, very just nice, solid colors. I don't really like to get all fancy in patterns and everything, although they do have some pattern shirts, but very comfortable clothes, stretchable pants. It's just super comfortable, but they look professional and you can wear them casually or professionally. I like some of their flannel shirts or untuck shirts. I love untuck. I never tuck in. So again, whether you're shopping for a special someone or giving yourself the gift you really want, I just buy myself gifts. Mizzen and Main is the perfect gift for any guy who works, travels, and or cares about looking and feeling great. As you could tell by my many photos across the internet, I care about looking fantastic. I'm practically a model. And let's be honest, every guy loves to look great. So again, shop now at mizzenandmain.com and save 20% when you spend $130 or more using promo code James. That's promo code James at Mizzen and Main, Mizzen and Main.com. This is such a valuable service for all business owners, big businesses, small businesses, doesn't matter. I wish I had this in the many different businesses that I've started. Sometimes it seems like your business is humming, but then suddenly you don't understand it. You're starting to fall behind. You're not understanding where your costs are, where your revenues are, where your payments are. Teams are buried in all sorts of like BS work, and you can't seem to close the books. So you need like one dashboard, one source of truth. I'm jealous of this business, NetSuite from Oracle, of course, NetSuite by Oracle. I wish I'd come up with this idea. It's a brilliant concept to have all your business intelligence on one dashboard. This is why you need to know these three numbers: 37,000, 25, and 1. So 37,000, that's the number of businesses which have upgraded to NetSuite by Oracle. NetSuite is the number one cloud financial system, streamlining accounting, financial management, inventory, HR, and more. 25. NetSuite turns 25 this year. That's 25 years of helping businesses do more with less, close their books in days, not weeks, and drive down costs. 1, because your business is one of a kind. So you get a customized solution for all of your key performance indicators, your KPIs, in one efficient system with one source of truth. Manage risk, get reliable forecasts, and improve margins. Everything you need to grow all in one place. So right now, download NetSuite's popular KPI checklist designed to give you consistently excellent performance absolutely free at netsuite.com/James. That's netsuite.com/James to get your own KPI checklist. netsuite.com/James. You bring up an interesting point. Like, one criticism of crypto is people say, well, what you just described, I could build just using the normal internet. So you just basically started to answer that. But what if that question was specifically put to you? Well, I could take my cookie coupons and advertise to Starbucks customers, hey, bring in your Starbucks reward card and I'll give you, some cookie coupons. Like, that could be done, like you say.
It could be done, but it would just be like very inefficient and full of friction. It's also what you just described is permission. We would have to first go and get Starbucks blessing to do this. Now, I have to admit there is a downside to the openness of composability that I described earlier. There might be, maybe somebody wants to airdrop a gun token or something to Starbucks customers, and Starbucks wouldn't want that. So it'll be interesting to see. But nobody has to use it, right? Nobody has to do anything. I actually all of the blockchain wallets that I have, there's constantly junk tokens that other people send into them. I don't even look at them. Like, I don't care what they are. But there's something about the openness, the interoperability, and the composability of having all the stores of value in one place in a way that anybody can write lines of code that makes them interact with each other, that I think is going to unleash the kind of innovation that we saw in the early days of the web. Like when we were going from that web 1.0 to web 2.0 period, where, the initial model was like, well, we'll send email. That's just electronic mail. And then you used to work at HBO, and they're like, well, we'll have a website. And the New York Times prints articles. Now they'll put them on a website. But then after a while, people said, wait a minute, we now have this unified global infrastructure for moving around bits of data. What brand new things could we invent that couldn't exist otherwise? And then people came up with things like social media, for example. With blockchain and crypto, we're going to see the equivalent innovation, but as applied to stores of value and things that benefit from having property rights.
Yeah, so it's interesting because, again, using the cookie Starbucks example, if they wanted to do it, make some sort of alliance there, they'd have to build their own private infrastructure for doing it. If I wanted to take an application, or if I was an airline and I wanted to make an exchange for frequent flyer miles, and I got all the airlines to agree, that exchange would only work for frequent flyer miles. If I now wanted to add Starbucks cards, that's a whole other thing I'd have to write. Whereas the infrastructure for this is already built. So with the internet, and the internet's a good example. Even before the internet, I could log onto a network with my modem and go to the New York Times network and see kind of what we would call now a website through a private, the modem would dial up a phone number. It would interact with a New York Times computer. You'd have to probably download some interface, and you would see, oh, here's the articles on the New York Times. If they wanted to do it that way. In fact, there was FTP, File Transfer Protocol, before there was HTTP, which could be roughly equivalent to that. But what the internet did was it made it so that you didn't have to build a network between two entities for this to happen. The internet was a public internet protocol, IP, that, it was TCP IP. So public internet protocol where any computer and information on any computer can communicate with any information on any other computer. And it's the same thing happening here. Instead of everybody building billions of applications to have anything of value be traded for anything else of value, that infrastructure's already been built, and people have been working on it for 13 years. Although I would say that particular use case still hasn't even started yet.
Not fully, but the nice thing about this being late 2022, as opposed to when we might have had a similar conversation 4 years ago in the last bear market, is that stuff is happening. Like Starbucks is doing rewards on the blockchain. Disney is actually, there's something new that they announced that I haven't even had a chance to look into because of all the FTX related drama. But there are many large players that have now committed significant resources to deploying things on the blockchain. And the nice thing about that is that when we hear from the usual suspects, like I saw once again this week, Nouriel Roubini is predicting that blockchain is useless and it doesn't solve any problems. Exactly what he was saying 4 years ago. In fact, I looked it up. October of 2018, he testified in front of Congress claiming as such. But whereas 4 years ago, people like me were mostly talking about theoretical applications that other people could deploy, those things are happening now. So I actually know very little about the coffee industry or engaging with coffee consumers, but Starbucks knows a lot. And the fact that they have this serious project that they probably be working on for years and are going live with it tells me that there's something there. Same thing for Disney, same thing for Nike, same thing for all of the different auction houses and galleries in the art market that have engaged with NFTs. Same thing with all the fashion brands that are doing things with NFTs. I don't know that much about high fashion, but I trust that Gucci does. And Gucci has gone as far as purchasing tokens that make it a member to a decentralized curation project, just so it can have some say on the kind of high-end fashion and art items that get sold there. So stuff is happening. And what I'm looking forward to is once the news of FTX and prices falling and people losing money starts to fade into the background, then it should be easier for everybody to spot the adoption and innovation that's actually happening.
Entresto, sacubitril valsartan tablets, is the #1 heart failure brand prescribed by cardiologists and has helped over 1 million people with heart failure. It's a prescription medicine that treats adults with long-lasting chronic heart failure and works better when the heart cannot pump a normal amount of blood to the body.
Don't take Entresto if pregnant. It can cause harm or death to an unborn baby. Don't take Entresto with an ACE inhibitor or aliskiren, or if you've had angioedema with an ACE or ARB. Don't take with aliskiren or within 36 hours of taking an ACE inhibitor. The most serious side effects are angioedema, low blood pressure, kidney problems, or high blood potassium. Angioedema is swelling of your face, lips, tongue, and throat that may cause death. If it causes difficulty breathing, get emergency help.
Ask your doctor about Entresto. To learn more, visit support.entresto.com or call 833-446-6699. For pricing, visit Entresto.com/cost. If you can't afford your medication, Novartis may be able to help.
At Discount Tire, we know how valuable your time is around the holidays. Get 30% shorter average wait time when you buy and book online at DiscountTire.com, so you can spend more time with friends and family this holiday season. Discount Tire, let's get you taken care of.